Hi, everyone. I'm Rosemarie Miller here with Nancy Daoud, a private wealth advisor at Ameriprise Financial, here to give us a stock market outlook for the week. Thank you so much for joining me today, Nancy.
Thank you.
So, Nancy, what macroeconomic factors are currently influencing the overall stock market?
So inflation will is has been overcome for the most part, but the Fed has a goal of getting it to 2%. And unfortunately, that's not going to come as quickly as everyone thinks. There's going to be a little bit of a rough time to get to that. The home stretch is always the toughest. We probably will not have rate cuts anytime soon. We project not until towards the end of the year, maybe later. And there will likely be a little bit of a slowdown, although maybe not a full-fledged recession. So, I think the Magnificent Seven stocks would like us all to believe that that's all that's going to drive the market upwards, and AI is probably going to help a lot. But I think it's not nearly as quickly as everybody believes. I think that this is a grand opportunity for investors to think about what to revisit the goals, the time frame for those goals, and most importantly, the appetite for risk. Because everyone feels somewhat bullish now. The stock market is doing so well, and this is the time to be more cautious and to revisit the time frame, and most importantly, again, what I call stomach lining, or fancy terminology for appetite for risk. And always remember that productivity is what will drive growth in the market ultimately, not necessarily one or two stocks.
So, what do you think investor sentiment will be like this week?
Well, I think based on the start to the year, everybody's feeling very optimistic and bullish. But the Fed is trying very hard, or did try very hard during the meeting, to curb that down a little bit. And the day-to-day sentiment really is irrelevant if you're in it for the longer term, because there's always going to be something that will drive markets in a given day. But like I said, it's really important to focus on the individual goal and the time frame for that goal, because if you're in it for the longer term, then it's okay to be bullish and to be more opportunistic. However, if you are in need of income, and or you're about to make a major purchase and you need the cash, this is not the time to risk it, because we would expect volatility to be always present.
So,
We are, as an advisory firm, we are not in the business of predicting the markets, but we are in the business of preparing for what may or may not happen. And that's the most important thing. Uncertainty is almost guaranteed. It's how to make the uncertain certain for each individual situation that becomes tricky.
well, Nancy, are there any specific sectors or industries showing notable strengths or weaknesses right now?
Yes, I think technology for sure, and financials are doing very well. Healthcare will do very well. Um, there are some risks out there. There are some geopolitical risks with that. We would expect consumer staples to do well. Um, Watch energy prices, because that will fluctuate widely if the geopolitical risk becomes greater. But really, the financials, healthcare, and technology are probably the biggest sectors that I would look at this time.
And speaking of those geopolitical tensions you're speaking of, how could that affect the market this week?
Well, it's hard for me to comment. I mean, I'm not an expert on geopolitical matters, but war is war, and it has to do with investor sentiment. I mean, anything could happen overnight, and that could affect investor sentiment, depending on if it's a ripple effect because it's happening several thousand miles away, or is it really close or worse on U.S. territory, which hopefully does not happen.
So, what indicators or economic reports should investors pay attention to for insights into the market direction?
Well, I think that's very individual. Most of our clients depend on us to provide them as much information as we can, or at least to help them decipher what they're hearing, because there's so many uh, bulls and bears out there. You've got opposing points of view out there that can be very confusing to many consumers. I think investors would do well to seek advice from a qualified financial advisor that can help them navigate all of this information. Technology's been great in providing us information at unbelievable light speed, but our brains are not equipped to handle that. So, knee-jerk reactions end up happening way too often and to many people's detriment. We have to allow our brains to actually think and also to reflect and look at our individual goals and timeframes and perhaps seek advice. That's good advice.
So, are there any upcoming events happening this week that investors should be aware of?
Well, the majority of earnings reports have already come out, more than two-thirds. I think for the most part now we're looking ahead to what could happen with, this is a presidential election year, and also the geopolitical risk. Some of the weaknesses that we see in the market are perhaps commercial real estate. Those are things that could affect banking and loans coming due. I think for the most part, the banking system can weather much of that storm, depending on how big it gets.
So, well, commercial real estate, hasn't that been a huge issue kind of since COVID?
Well, yes, office buildings are empty. Are now, many people have gone back to work, but not everyone. And if they are, they're going back at maybe 2 or 3 days a week, which leaves much of the space empty. And some of these loans are coming due, and if they're refinanced at a higher interest rate, which we are now in a higher interest rate environment than just 2 years ago, that causes a bit of a problem for some of those loans. Like I said, again, depending on the magnitude of this, it could be a ripple, or it could be a major problem for the banking institutions.
Well, Nancy, is there anything else on your radar regarding the stock market outlook for the week that you believe should be on ours?
Well, I think that investors in general should pay attention. This is a grand opportunity and a good time, because things have come to somewhat, and I hate to say balance because there's no such thing as balance in the markets, but things have settled down a little bit. We're not in major up or down swings anymore. I think it's time to revisit with an open mind, what are the goals, what are the timeframes, and be really honest about your appetite for risk before really jumping onto the bandwagon, especially with all the noise about AI and technology, because there could be significant risks there if you're not prepared for it.
Well, thank you so much for joining me today, Nancy.
You're welcome. Thank you.